what am I to take away from Facebook being flat, basically, down 0.5%, Apple being down after the results they just reported, and given the moves that we've seen in those stocks over the past few months?
I'm going to disagree with Lindsay. I think this market is richly priced. I mean, basically, it's priced for perfection. Rates have to stay low, the economy's got to come back, and earnings are going to go up. And there's an inconsistency in that story, which is, if the economy is going to come back as strongly as people claim it is, how are rates going to stay low? This belief that the Fed can somehow keep rates at whatever they want it to strikes me as delusional. So I think the market is richly priced, and it'll look for excuses. There'll be up days and down days. But I think that that I'd put my seatbelt on. This is going to be a very rocky quarter in my view.
Well, when I look at valuations here, I'm seeing the S&P 500 on a forward basis trading at about 23 times. That's come in a little bit since the peak that we saw in the summer after the market took off following the March bottom, which was around 25, 26 times. And I think what a lot of people are underestimating is how earnings can really impact that multiple going forward. Right now, the market's expecting that earnings get back to break even, 2019 break even, by the end of this year. I think what you're seeing from the earnings season this quarter, and what I expect to see, especially as the recovery picks up pace as the vaccines distributed and the year progresses, is that those numbers are going to move swiftly higher, and that's going to help support a lower multiple. But I do hear you that the biggest risks on the multiple front and for the market in general are inflation and interest rates. But I do believe that the Fed is going to do all that it can to make sure those things remain manageable.
All that it can are the key words here, because the Fed has only so much power and no more. I mean, inflation goes to 3%. Does anybody in this universe believe that the Fed can keep rates at 1%? I don't think so. So I think that there is a very real danger to the market from those factors. But I think that that earnings can come back and the market can still be overpriced. In fact, I value the market assuming earnings come back and more in 2020, 2021, and I'm still having trouble getting about 5 or 6% as my return on stocks. That's a historic low.
Well, I guess you could look to GameStop for alpha. I'm only partially joking there. What do you make, Aswath, of what traders, retail traders, maybe some others, are doing with these heavily shorted stocks, what it signals maybe about the markets overall?
You know what? My reaction is a pox on both houses. I've never been a fan of hedge funds. I don't think many of them bring much to the table, and they charge you absurd amounts of money for doing so. And when I look at the investors who are driving GameStop and AMC, they're pretty open about the fact that they couldn't care less about value. This has become a game. And the question I would ask for those Reddit investors is, what is your end game? What do you hope to get out of this? If the end game is you want to drive a couple of hedge funds out of business, okay, you might succeed. But do you really want to end up with AMC, GameStop, and BlackBerry as the stocks in your portfolio? I mean, these are companies with serious, serious structural problems. Those problems are not going to go away just because you push up the price.
Yeah, and that's
there is going to be pain. Yeah.
That's what I want, because as we see these stocks coming down, a couple days ago, I tweeted out, this will end in tears. And there are a lot of people on Twitter who are like, for whom? You know, the short sellers, blah, blah, blah. Because, you know, this was very likely to come down for some reason or another. Now, it turns out perhaps part of the reason why is that the brokerages are restricting some trading, retail trading in these stocks. But when were they planning to sell, to your point, is what I'm wondering. And what was the end game there? I think there are some people, Chamath Palihapitiya got out of GameStop yesterday. Good for him, but a lot of people didn't.
I think people are learning the wrong lessons from the Tesla short squeezes. The difference between Tesla and GameStop is the people who sustain Tesla actually believe in the company. They think it's going to be a great company, whether you agree with them or not. Is there anybody out there who thinks that we're all going to go back to malls and GameStop is going to come roaring back, or that AMC is going to come back as the movie theater business of the future? I mean, I don't see anybody buying these companies because they think that these companies have a rosy future. That is the big difference between Tesla and GameStop. And for those people who draw on the Tesla lessons, you might be looking at the wrong story.
Shepard Smith here. Thanks for watching CNBC on YouTube.